Good morning. I'm hoping everyone can hear me right now. The session is being recorded. Welcome. My name is Bob DeLisa, and I'm with Cooperative Systems, and I'm here with TrueShield as co-sponsors for a webinar, Limiting Liability Before a Data Breach, a discussion on cyber liability for credit unions. So as I said, my name is Bob DeLisa. I'm the president of Cooperative Systems. We're a managed IT services company. We were founded in 1993, and we service the Northeast area, New England, and beyond. We specialize in the credit union IT field, supporting a number of credit unions throughout this region. Our panelists today are Paul Cayazzo, Chief Security Architect with TrueShield Security Solutions, Chaz Bellingrath, a National Practice Leader for Privacy, Network Security, and Technology E&O with ARC Access and Surplus, and Scott Goddess, Partner at Barnes & Thornburg, LLP. I'm going to hand it over right now to Paul. So Paul's going to be discussing security. He's going to be his specialty is an entrepreneur and strategist, as well as a cybersecurity expert. He's responsible for developing corporate strategy and leading the technical product and service development efforts for TrueShield. He'll start us off today by discussing threats, impact, and reducing risk. Thanks, Paul.
Thanks, Bob. Good morning, everybody. So real quick, I want to give you guys an introduction to who TrueShield is. We're a global cybersecurity company based in DC. We take a concierge approach to managing our customers' clients, our security solutions. We provide managed security services in the realms of managed security operations centers, security appliances, other security solutions. We're also experts at risk assessments, penetration testing, and threat protection. So what I'm going to talk to you guys about today is the threats which are unique to credit unions, and I want to talk a little bit about the problems that we're seeing on the global landscape and what they really mean to you guys. I wanted to start off with this quote from Brian Dye, Senior Vice President of Information Security at Symantec, one of the the world's leading antivirus programs. The prevailing sentiment is that they're only going to be effective at stopping about 45% of attacks that happen on networks today. So the question that begs is, what are we doing about the other 55%? Can we get that down to zero? Can we get reduce risk completely so that there is no risk that can impact us? Unfortunately, the answer to that is no. We can manage risk down to quite a low level, but we're not quite able to get to a zero. There's always going to be a residual risk. So what I want to talk to you guys about is reducing that risk as much as we possibly can, and what do we do about that residual risk that's left over. So some more stats and information about threats that credit unions are facing every day. What we see more often than not are these sorts of issues right here. We see phishing on a nearly day in, day out basis, constantly seeing things like spear phishing of employees and executives. We also see, and perhaps probably more challenging for credit unions to manage, is phishing of the member base. It's harder to apply controls out to your member population that are accessing the internet to do their day-to-day tasks, or going on Facebook or whatever. They're being phished on a continuous basis as well. And the question becomes, how do we not just solve that problem, maybe through awareness and training, but can we build some controls in place to detect that sort of thing and prevent it when it does happen, and contain it preferably. I'm also going to talk a little bit about targets of opportunity. So the majority of the attacks that your members are facing, and also your employees are facing as well, are browser-based attacks. And this ties back to that antivirus statistic that I mentioned a few minutes ago. The typical antivirus program is not really going to be able to detect this sort of thing on a truly reliable 100% sort of basis. The attacks are more focused on your web browsers and plugins to those web browsers like Adobe Acrobat Reader and things like that. Those are the most commonly accessed threat vectors. And those are, again, somewhat difficult to solve both inside the organization and out in your member population. Also, we see a lot of mobile banking and web-based banking attacks. Those are attacks not just affecting the mobile phones, for instance, at an operating system level, but also threats which could actually be impacting your web UI. So let's say there may be a weakness in how you guys parse input on your web application. Those sorts of attacks could compromise not just your internal systems, but also your customers and your member base. So those are important to try to wrap your hands around. You need to be able to detect when somebody's attempting to do sort of that sort of thing, preferably prevent it, but if you can't, then contain and respond to it as quickly as you can. Lastly, on this slide, we also see a huge number of distributed denial of service attacks on a day-in, day-out basis. These are the sorts of things that can take a business completely offline. There's not a whole lot that you can do about it once it starts if you haven't already built some preventive controls and some DDoS mitigation controls into your solutions. So that's something to bear in mind. There are solutions out there which can detect when that sort of attack is ramping up and take proactive steps to prevent them from actually disrupting your operations. So what's the real scope of this problem? I think, to me, the most salient point here is that the average amount of time it's taking for organizations such as yourselves to detect that they've been breached is over 7 months. 210 days is the average. So some are better than that, certainly, but some are much, much worse than that. In fact, 5% of customers or clients take 3+ years to detect they've been compromised. That's a terrifying statistic right there. If it's taking 3 years for you to detect that you've been compromised, then the attacker will not only have extricated every last bit or byte of information from your own databases, but probably is also impacting your partner organizations. And then at that point, you become a third-party risk to the partners that you're connected to. And the thing about that is the liability then kind of compounds, where you're not just a risk to your own member base, but you're also a risk to all those partner companies whose member bases are also going to potentially be impacted by that. The average cost of a breach is around $6.5 million to U.S.-based companies. So if you can think about, and also another statistic on this is 84.5% of respondents to NAF2's most recent cyber breach investigation report, 84.4% responded that they had been involved in some sort of compromise or breach within the last year. And on average, that's costing $6.5 million. So that's a huge amount of money to lose as a result of a single cyber breach. The thing is that, to remember here, you can't prevent attacks that are targeting your members, especially if they're going to do that via the open internet. But what you can do is build controls to contain compromises to your core infrastructure when they actually happen. So again, lastly on this slide, it's really important to remember that third-party risks are unaccounted for by and large. The organizations that connect to you via maybe a point-to-point VPN or service provider sort of relationship, those sorts of risks are hard to handle, and they're actually some of the most significant risks facing organizations like you today. You need to look no further than the Target or the Home Depot breaches to find very good examples of those. And in fact, the Target and Home Depot breaches combined were responsible for compromising almost 20% of your member base payment card information. So 1 in 5 of your members was impacted by those particular breaches that you have no control over, and they're brought in through a third party to both Home Depot and Target. So why is that such a big problem? I think number one for me is the scale. We're talking about billions of events per day. Only a small handful of those actually represent real risk to you. So every device in your network is constantly streaming out logs that have some information on them, whether that's meaningful from a security standpoint or not is really where the rubber meets the road. You really need to have automation and skill to be able to pick those few instances out of the massive volume of information that's flowing. And that's a hard thing to do. And the worst part is the attackers actually have the advantage here. They're operating 24/7, 365 days a year on Christmas. You're probably not. They're producing hundreds or thousands of new attacks per month. And as I mentioned before, antivirus is not really capable of detecting the vast majority of that stuff. What makes this even worse is we've really got to be right 100% of the time. They've really only get it right once. And what that means is if they only have to be right once, then you've got to be constantly vigilant, constantly working on securing your information, and constantly monitoring yourself to make sure that you're not going to fall afoul of something like this. Usually what we see is security teams are minimally staffed and operating in 9 to 5, and that construct does not really work in the context of modern sophisticated threats. The other thing we see is that our clients, before we interact with them, they've got lots of information that's available to them, but they're not really making very good use of it. It's all siloed data that they're not getting the business and security value out of that they could. And so it's really difficult to correlate events that are happening on your edge devices all the way into the endpoint where the data actually exists that you're trying to actually protect. So, well, how do we solve this problem? Our recommendation, number one, is to take a program-oriented approach to security. What that really means is that it's not a single device or application or control that's really going to make a difference for you here. It's a holistic ecosystem of controls that can actually produce a defense that will protect you and your member base from attack. It starts with policies. It starts and it moves to processes, technology, people, et cetera. They all have to be working in concert together to actually result in a secure environment. You can actually use the data you've already got. You've all got firewalls. You probably all have antivirus systems and IDSs and IPSs, but that information is not being brought together. You can bring that together to power your preventive controls, enable threat detection on a much quicker basis, and streamline containment and response. And those are really the goals for the end of the day, what we're trying to do. Okay, so SIM is a good way to reduce risk by bringing information together in that manner that I was just describing. What we're able to do with the SIM, a security incident or security information and event management system, is pull together event logs from your edge device all the way into your endpoint devices and enable us to rapidly detect activities that are happening in your networks that could potentially be damaging to you. It's really the only way to do that in a kind of meaningful manner. And what you're trying to do is take those individual snippets of information and put them together in a way that you can actually distill actionable intelligence out of. And so what I mean by actionable intelligence is how can I quickly detect that something bad is happening, and then can I very quickly contain that and eradicate the indicators of compromise that have shown that I've actually had some bad incident happen on my network. Is that possible to do? And I hope it is, because there are regulatory compliance requirements that we all have to meet that this sort of thing is a requirement for. Additionally, what we see more often than not is new client requirements are asking our clients, do you have these sort of security controls built in? And a lot of them say no, some say yes, but it's kind of a growth area in security where most people now realize that there's a need for SIM, but with the SIM, it's got its own challenges. And I think number one amongst those is that it's a complex type of system. A lot of different moving parts need to be brought together in order to make this work in a manner that's going to power those detective and containment controls. And it can be hard for you to realize your return on investment without having dedicated staff that are actually watching this. And that's not usually an insignificant investment either. SIM is not an inexpensive tool. So if you're looking at procuring a tool like this, bake into your calculations the amount of time it's going to take you to integrate all the different log sources with that SIM. Not an easy thing to do. Additionally, I mentioned that 9-to-5 paradigm earlier. 24/7 is a hard thing to do as well. It's not really logistically possible for a lot of organizations, but really it's a requirement to kind of get over that attacker advantage. And if you're able to detect compromises as they happen, what do you do next? That's the $64,000 question. If you've detected you've been compromised, can you rapidly respond to it? Can you contain that compromise and eradicate it? If not, then you've still not realized the actual value of this. So what we often recommend is going with a managed security operations center server approach. Managed security services partners can really help you guys benefit or realize the benefit of your SIM, or additionally other benefits, including access to like global threat intelligence feeds. Basically, what I mean by that is a managed security services partner should have a wealth of threat information available to them that you probably don't, simply because they're monitoring so many networks. So threats that impact a network in one client may eventually impact you, and you wouldn't be able to access that information if you weren't working with a managed security services partner. It's also going to greatly reduce the security-focused workload for your technology staff, and it's going to enable you guys to have a very quick 24/7 operational capability mechanism. Additionally, I know you guys have NCUA and PCI requirements out there, and this sort of approach can help you achieve those without having a huge expenditure or huge logistical challenges that you may face otherwise. I mentioned at the beginning of this that there's always going to be some residual risk. There's no silver bullet. There's no way to reduce risk down to zero. We certainly recommend that cyber insurance is a good method to further protect yourself from harm if a compromise does occur or really when the compromise occurs. But I really want to stress this. It's not a replacement for a sound cybersecurity program, and it's got to be layered on top of one. There are cases where having had not done a good enough job by building a sound security program to begin with has caused problems further on down the line. So make sure that you've got a good sound security program, you've established a good baseline, you're operating from a known good standpoint, and then layer insurance on top of that to get you the rest of the way. And with that, that ends my part of this panel presentation, so I'm going to hand over to Chad.
All right. Yeah, Paul, thank you very much, Paul. This is Bob getting back on. I wanted to just go over a little bit of housekeeping that I forgot to go over before we started. There's going to be time for questions and answers at the end, so we're going to try to leave at least a good 10 minutes to cover those questions and answers. So please use the chat question box in your control panel to submit those questions. So our next speaker is Chaz Bellingrath. Chaz and I, we know each other from working in the insurance industry, and Chaz frequently instructs privacy seminars and participates on executive panels for national cyber risk conferences. Today he's going to discuss the data breaches, breach response, and third-party loss issues. So Chaz, I'm going to give you control. And
great. Good morning, everyone. Thank you for the introduction. I'm happy to be here today. So I'm going to talk a little bit about the evolving liabilities of cyber privacy and security exposures. Again, my name is Chaz Bellingrath. I'm the national practice leader at ARC. ARC Excess and Surplus is a brokerage firm based out of Long Island, and I manage our office here in Boston and exclusively work on cyber tech, mainly insurance and risk management, to help risk managers and really everyone in the organization understand cyber risk. It's really an evolving liability these days. So just a quick statistic, 1 billion data records. Although most consumers have probably only heard about a few breaches, over 1,500 data breaches occurred in 2015, which exposed over 1 billion records. So that's pretty scary to think about. I'm sure most people on the call, and obviously some of your members, were affected by data breaches in the past year from Target and Home Depot, and maybe even most recently Anthem. Sorry, Bob, if you wouldn't mind going to the next slide for me, please. All right, so let me give you a little quick overview of what is cyber privacy and security liability and the overview of and history of the coverage. Cyber privacy liability has actually been around for quite some time. It was really developed in the late 90s, and we found that financial institutions were really the first buyers of this coverage, mainly in conjunction with the banker's professional liability coverage and directors and officers coverage. But in most recent years, it has really developed, and one reason why we titled this presentation The Evolving Liabilities, specifically with the legal landscape of breach notification laws. And traditional third-party liability policy for network security and privacy liability actually formed mainly into a first-party breach response coverage, which allows organizations to provide notification and credit monitoring to affected individuals, as well as hire a forensics firm if necessary, hire a data breach coach and legal counsel, a public relations firm, and also additional business interruption coverages. So the coverage has really evolved over the last couple of years especially. I would say probably about 85% of the people that we work with are first-time buyers. So if you're on the call today, don't worry, you're not the only ones. There is a lot going on with this coverage, and it's important to make sure that you're working with coverage counsel like Scott or a broker like myself to make you feel comfortable and understand, the four corners of the policy before just off and buying it, because the industry really lacks formality. There are different coverages out there, and it's you really want to make sure you tailor the right coverage for your firm. There's really no standard forms out there, so it's very important to make sure that the policy fits your organization and your activities. Next slide, please. All right, so here's a quick graph of the history of breaches over time. And a lot of people always ask me during education classes why I show this. And it really, you know, to Paul's comments earlier, it really is a nice way to complement the IT and the IT industry specifically, network security industry specifically, because data breaches really have gone down because of more security and more people investing in security. So to Paul's previous comments, I mean, obviously cyber liability and privacy and security liability is a nice entree into your insurance portfolio, but you're not going to get the coverage without good security. And we have seen a downfall of breaches over time, but then again, we've also seen a change in our industry. If you look at these breaches from 2011, 12, and 13, you actually saw a lot of negligent type of claims. That means stolen laptops, lost thumb drives, maybe an unencrypted backup tape. And today we're seeing more and more sophisticated attacks. So, you know, kudos to the IT folks on the line. Better security certainly means less and less incidents, but they are more sophisticated these days. Next slide, please, Bob. All right, so I'm sure we've all heard about Home Depot and Target and all these, but I wanted to just hit on your industry specifically in credit unions. Just this past spring, Piedmont Advantage Credit Union notified customers of a data breach when one of their laptops containing personal information of its members could not be located. We actually see this quite a bit where, again, negligence comes into play, whether it's stolen out of a car or lost out of a coffee shop. The information contained name, address, date of birth, member account numbers, and social security numbers. According to the credit union, the laptop included a password, and it was protected. However, more and more digging went into it, and they didn't know at first how many records were affected, and through forensic review, they actually determined that over 46,000 people were affected, and that meant all of their members were notified. So just a simple lost laptop right there, and we'll talk a little bit about more about breach costs later in the presentation, but I'm sure they spent well into the six figures on notification and breach response just on that claim alone. Next was this fall, Palm Springs Federal Credit Union out in California was conducting an audit of their systems and realized that one of their hard drives contained consumer data was actually missing. The information contained on the hard drive included customer names, addresses, social security numbers, and account numbers. And obviously, we want to avoid having this information, but in our business as credit unions and financial institutions, it's obviously imperative for us to have it. So it's also important for us to protect it. Back to IT and Paul's network security piece on here, but also you forget how much information you have. And you forget about information that could still be even in paper format or an old hard drive that maybe wasn't protected a couple of years ago, would have been protected today, but you found it and it was old and you just figured it was maybe lost or somewhere in storage or whatever it might be. But breach expenses for this will likely exceed $50,000, and this just happened this past fall. So next slide, please. So I talked a little bit about at the beginning of our presentation on the overview of the coverage and really how the coverage has evolved into a breach response or first-party coverage. And just for all the new buyers out there, the term first-party, traditional insurance policies are third-party liability policies where you would need to be sued in order for the coverage to be triggered, or there would need to be at least an alleged wrongful act. In this case, you really just need to have a data incident. And what I mean by data incident is you may not know the scope of the incident, whether it's a lost laptop, maybe it's a denial of service attack, maybe it's a rogue employee. And you might sit down and look at your incident response plan and figure out what you may or may not need to do. But it's really important to work with breach counsel and breach response coaches. And our policies will afford the following first-party breach response expenses. the cost to hire a breach coach and legal services, the cost to hire a computer forensic or security expert, the cost to notify affected individuals and provide credit monitoring to those affected individuals. You may need to set up a call center. You may also, if there's bad press, need to hire a public relations or crisis management firm. Those are the immediate first-party breach response expenses. The breach coach will really help you out and determine whether or not you should hire a forensic investigator or you should notify. Again, sometimes just pulling the trigger and notifying everyone isn't the best thing. There's actually studies that say that notifying too quickly is actually a bad thing. Another reason why it's important to have a breach coach. Additional first-party expenses, which I touched on a little bit, was cyber business income and extra expense, including data restoration expenses. These really aren't breach response expenses, but more on the first-party side. So for all of us using online portals or online gateways these days, if there was a cyber attack on your network that were to cause a loss of income or extra expense, or maybe damage some of your data, maybe you have a hacker who's extorting your system, that would all be covered under the first-party business interruption and cyber extortion coverage. So again, the policies that we issue on our end include all of these coverages, but it's important to figure out not only, are all these coverages included, but most importantly, do we have enough coverage in all these areas? As we are seeing more and more sophisticated attacks, notification and credit monitoring is almost becoming somewhat standard these days, where forensic expert and legal costs are really the bulk of the breach. And next slide, please, Bob. All right, so next is third-party losses. We just touched on first-party breach response. Third-party losses would include negligence, failure to implement and maintain reasonable security measures, violation of privacy, invasion of privacy, breach of contract. Obviously, you see defense and damages. We are seeing more and more media and intellectual property type of claims as well, specifically as more and more of our credit unions and financial institutions are active on social media, whether it's Twitter or Instagram or even LinkedIn. We have seen, copyright, trademark infringement type of claims, as well as libel, slander, and defamation. Last but not least, and which actually is a very important piece of our conversation today, and maybe Scott will touch on it, is the regulatory actions, including fines and penalties, which would also include PCI fines and penalties from the payment card industry. Frequently with financial institutions, we are seeing more and more involvement from regulators investigating security controls specifically after a data breach. This may result in fines or penalties, or at least legal costs from an investigation standpoint. Last but not least, we are certainly seeing activity from the brands, being Visa, MasterCard, and American Express. Looks like we just skipped a couple slides. If you could go back, please. All right, so let's move on to just some of our key markets. Next slide, please. All right, right here. There are several markets that write cyber privacy and security liability. We work with over 50 markets at ArcXis and Surplus. I would say that, you will see Chubb and AIG and Beasley and Excel and some of these markets probably being our top markets. But we do work with markets really all over, not only in the U.S., but also London markets as well, which are very active. At the end of the day, there's a right market for every insured. It's just important to make sure that the policy terms and conditions line up with, your perception of the policy and getting the broadest cover out there. Okay, next slide, please. All right, at this time, I'd like to pass it over to Scott Goddess over at Barnes & Thornburg.
All right, Chaz, thank you very much. So I'd like to introduce Scott Goddess from Barnes & Thornburg. Among other accomplishments, Scott represents clients facing cybersecurity, data breach, cyber attack, privacy, and other technology-related claims. He's here to discuss cyber-related claims, risks, tips on cyber crimes, security policy, and helping clients with insurance coverage for cyber risks. Scott.
Thank you all. Again, Scott Goddess with Barnes & Thornburg in DC, and I am co-chair of our data security and privacy practice and a member of our insurance recovery and counseling practice. And so what that means is I spend a lot of time working on cybersecurity and privacy issues, and most significantly, and the most significant portion of my practice is helping policyholders make sure that their insurance companies actually pay claims when something has come through and the insurance companies need a little bit of arm twisting. And perhaps just as important, if not more so, is that when companies have been buying cyber insurance policies or thinking about it, and my clients include banks and other institutions, talking through with them the terms, conditions that are being offered to help them avoid the trapdoors so that they don't need to call insurance coverage counsel after a claim has come through and the insurance carrier decides to try to be a strict constructionist of the insurance policy language. So, in terms of cyber risks and liabilities, you've heard quite a bit. You've gotten some scare put into you as we've been moving through the slides today. And so let's talk a little bit about, to give you a little more color of some of the things you'll be talking about beyond just a breach of somebody's personally identifiable information, which will then make you send out letters almost certainly. Other things that have been hitting the news that have been eye-opening for American companies. Data breaches supported by state actors. Well, not to make this death by PowerPoint, let me explain what I mean by that. An entertainment company whose name everybody certainly knows had a movie that they were planning to release and allegedly angered North Korea. And so North Korea allegedly, again, or some other hackers that were pretending to be North Korea, stole intellectual property. They made the network unavailable. They destroyed data. They publicized everything from salary to other employee information, and they put the company in the spot where employees were operating with pen and paper as they were unable to use their network. And so that's one example, and then it ended up resulting, among other things, not only was the value of their IP diminished, but an employee lawsuit was brought in terms of the PII that was released of the employees. Beyond that, there was a gaming company, a massive gaming company that has locations in casinos in Las Vegas and other places. Allegedly, a state actor hacked in and destroyed data, took the network down, and resulting in what was estimated to be $40 million to restore their network. Now that's beyond sort of the usual we think about in terms of personally identifiable information being disclosed. We're in the spot where, in terms of regulators, that the government regulators that have, some would say, self-appointed themselves as to being the new sheriffs in town, the FTC has had its jurisdiction affirmed, at least for the short term. That question is currently before courts, but the FTC currently still has jurisdiction to look into whether you were engaging in unfair trade practices because you had the temerity of being the victim of a crime and being hacked. That's right. If you were hacked, the FTC will ask whether you were engaging in unfair trade practices. So those are the sorts of things to keep in mind when you're thinking about your risk transfer and whether insurance will cover these sorts of risks. And let's put a little finer point on things. What will this cost you? This will cost you, among other things, if you look at the net diligence study, which is based upon claims actually paid by cyber insurance carriers. Now this admittedly is not scientific, but it involves approximately 117 claims that were analyzed by net diligence, which works closely with cyber insurers, and they found that in terms of third-party breaches, 13.7 million was the high point in terms of total costs. And in terms of first-party losses, which when I say first-party losses, I mean interruption of business, deletion of data, etc. These denial of service attacks cost between $1.5 and $5 million in terms of getting the business back up to speed. Small data breaches, this is the Poneman report, slightly different from the number you saw before, and the reason is the Poneman report is widely known and touted as a leading report as to the size of data breaches. What is not frequently disclosed is that the Poneman report, with its $3.8 million in data breach costs, is based upon 100,000 records or fewer, not actually the major breaches. So the sort of thing you can carry on a 4 gig USB stick, 100,000 records or fewer, that could fall out of your pocket, that costs $3.8 million if it's sensitive information. Now that type of expense, the $3.8 million includes direct expenses like engaging a forensic expert, outsourcing hotline support, and providing free credit monitoring subscriptions and discounts for future products and services. It also does have a factor of what I call a soft cost or an indirect cost, that is in-house investigation and communication, because you all have day jobs, but after a cybersecurity incident, a data privacy incident, you now have a second day job, which is figuring out what happened and resolving it and trying to keep your company in business in light of the ding to the reputation that you'll suffer because, again, you had the temerity of falling victim to a crime. So let's go back. In terms of how do you offload that risk to a degree, in addition, because you all certainly are taking steps and will be taking steps to be as secure as you can be. But again, with there being no silver bullet to 100% security, you're thinking about cyber insurance. And Chaz can certainly tell you that the market is shifting. He's seeing more inquiries. I'm seeing more inquiries as people want to hear about what is in their policy and how do they understand it. That it's out there. There's certainly an uptick. But keep in mind that in terms of the pricing, the fact that you're a financial institution does affect things just a bit. So perhaps you're wondering, but don't my other insurance policies cover these risks? I mean, I've got a whole parcel of policies, and what I'll tell you about that is you should think about these policies as overlapping coverage, potentially overlapping coverage, in that if you buy a cyber insurance policy or an entire tower of coverage, you want to be sure that you've got as full coverage as possible if you've got a significant claim that comes through. And so, for example, if you're an entertainment company and you get sued in an employee class action, perhaps you turn your employment practices liability insurance policy that provides coverage for privacy-type claims in the context of employment. But let's talk about these. If you've thought, hey, I don't need cyber insurance because I've seen articles saying that I've got coverage elsewhere, understand here's the state of the law. General liability policies, not only do they cover things like bodily injury and property damage, but they also cover things like oral or written publication in any manner of information that violates a person's right of privacy. And that's exactly what a data breach says, if you ask me. Unfortunately, I'm not the king of the world when it comes to making law, and so some judges have been struggling with it. One case, a Sony case out of New York, where Zurich sued Sony for a declaration there's no coverage for a data breach under a general liability policy. Zurich unfortunately won that. The case was on appeal, and Zurich, some might suggest, bought its way out of the appeal. I don't know what the settlement was, and that's what some might suggest, but Zurich settled, and I would suspect that Zurich paid to get out of that. Another case, Portal Healthcare, has said that there is general liability coverage for a data breach. And so understand the law is mixed, but perhaps more significantly, exclusions are coming they started in 2014, that might be in your general liability policy that are specific, the insurance companies would say, to data breaches. Now, I would never come out and say that such an exclusion is lights out for coverage, but I would say it would make your job much more difficult to get coverage if you're trying to have your general liability carrier cover and that exclusion's in place. What about more specific risks to credit unions beyond just PII exposure? Well, how about you heard about card brand liabilities, and you all know that after an incident, that if you are the issuing bank, you've got to satisfy fraudulent charges and you've got to send out new cards. Or perhaps after an incident, if you're on the other end of things, you may be asked to pay those by the brands. So one case, a crime case, because these all are, at bottom, crimes, analyzed that, and it was a retailer that was obligated to pay multiple millions to the brands after an incident, and it turned to its crime carrier, AIG. And AIG said, please take a long walk off a short pier, if I can paraphrase. And the retailer said, okay, well, I'm going to sue you to get a declaration. And they won. And they were told that the court said that the crime insurance policy through the computer fraud and funds transfer fraud endorsement provided coverage. Now, I think AIG has perhaps since changed their forms to put in further exclusions, but something to think about. Now, even more bank specific than that, E&O and professional liability policies. There's a case out there, First Commonwealth Bank versus St. Paul, which had a St. Paul Select One for Community Banks policy, which you may have seen before. Bank client had $3.6 million wired out of its account after being targeted by a computer hacker. Now, the bank client turned to the bank and said, you need to reimburse us the $3.6 million that you were unable to stop after we figured out this was a problem. And the bank, looking at law and regulation, had the view that it was obligated to repay that amount, and it turned to its insurance carrier and sued when the insurance carrier, St. Paul, said no. And so where the case currently stands is that the insurance carrier said, hey, we have no obligation to pay whatsoever because the bank just forked over the money. It wasn't litigation, and the court said, no, I'm going to allow the case to move forward. What's the takeaway for you? To not think about it as a law school class, but rather there is a potential opportunity there to review all of your insurance policies when you have liabilities of that nature, even if your claims person says to you, we didn't mean to cover that in that policy, you should have bought something else. Because when you hear, we didn't mean to cover that, that is code word for we don't have an exclusion that we can point to as applying directly. And we didn't mean to cover means perhaps there's coverage and you'll probably have to fight about it and fight for it, but it could be worth your while. Further in the D&O context, a case called First Bank of Delaware versus Fidelity and Deposit Company of Maryland, it was a D&O Select Plus policy. And it was, again, involving card brand liabilities, assessments from MasterCard and Visa for fraudulent charges and card replacement costs, and the D&O policy was held to cover that type of loss. So again, think broadly when you're thinking about your other coverages. And finally, your first-party property policies, oftentimes there are slivers of coverage. Now, nothing that will really move your needle in terms of your balance sheet, but there can be coverages here and there for damaged data, for actual denial of service attacks, or other types of cyber attacks and incidents. But you're thinking to yourself, okay, well, I have bought a cyber insurance policy. I am not really so trustful of the insurance industry in light of the times I hear them in the news and the fact they get sued all the time, but will cyber insurance policies pay? Generally, they have. Generally, they've done better than in other industries for claims that are sort of straightforward right down the middle. If you've got a straightforward loss of personally identifiable information, you have to hire a forensics company, you have to investigate, you have to send out letters. They frequently do well. It's not perfect, but they frequently do well. But other things, these cases I put online, again, not because this is Law School 101, but to give you some pointers as to where some potential issues are. And they largely come down to two things. One is a supplement, and the other is a question of whether you have maintained security. So the first one was a case involving Chubb. So this case involved a policy called Cybersecurity by Chubb for financial institutions. And this was a financial institution that had a loss of $5 million. And they went to Chubb, and Chubb said no, curiously enough. And Chubb said, when it was sued, said in litigation that it could deny coverage because the policyholder, the bank, had failed to maintain proper authentication and data security measures as a condition of coverage. Let's chew on that for a minute. You failed to maintain proper authentication and data security measures. Every single claim made under a cyber insurance policy fails to maintain data security measures, because there would never be a claim had there not been a failure to maintain data security. That's the entire nature of cyber insurance, is that there was some failure of data security measure. And so Chubb ultimately settled that, so we don't know the position that they would take. But in Columbia Casualty versus Cottage Health System, Columbia Casualty, aka CNA, has filed a lawsuit for a similar argument, saying that the insured did not take sufficient steps to engage in security and et cetera. And so what's the takeaway there? Well, CNA hopefully will lose, and Chubb ultimately settled its case, but pay close attention to what's in the policy as to an exclusion or promises in terms of maintaining security. And if you do something, for example, if your application says, are you PCI compliant, or are you compliant with, or do other things, be very, very, very careful to make sure that you actually do those things. Or, here's a point, if you're certified as meeting a certain standard, and the box says, are you PCI compliant, yes or no, consider saying, yes, as certified by a third party. Because insurance companies love to try to rescind policies. Now, they've done it in other contexts. I've seen it a couple of times in the cyber context. They've threatened it, and they said, well, you represented the following. And if there's a representation in an application, they'll say, but you misled us. Well, you don't want to mislead them. And if a third party said you're compliant, then you're in the spot where you haven't misled anybody, but rather you have actually told them what you've been told. So keep that in mind. Other things, this state, national versus global payments was a sublimit for the question of card brand liabilities, the assessments after an incident. And traveler's property and casualty was a question of how broadly your errors and omissions coverage applies, because the terms were negligent act, error, and omission, and the allegations were that somebody wrongfully held data back and didn't give it over. It was an intentional conduct. So that the takeaway there is ask for broader terms in terms of what's being offered within your policy language overall. Now, what tips do we have for banks as they're evaluating a cybersecurity policy and program? Let me just give you a couple of takeaways, because we're running short on time and you probably can't write fast enough to get everything down. But think about your particular risks when it comes to cybersecurity, and look to whether the offered policy terms line up with what your specific risks are, rather than the boilerplate that's written for anybody and everybody. So for example, do you have coverage for fraudulent wire transfers, where your bank actually made a fraudulent wire transfer, or your customer is pursuing you for allowing it to happen? Now that might be found within your crime policy, perhaps as an endorsement. I know of one carrier that specifically is writing that for a bank's crime policy. It might not be in your cyber, but look for it. Will you have coverage for card brand liabilities? Will you be in the spot where if you are pursued by the card brands for these assessments, that you'll have coverage for it? Is your policy specific about it? And if you do, will you have full policy limits, or will you have just 10%? So for example, I've been in multiple situations in which the carrier said either no, or we will cover it, but only as to 10% of the total policy limits, which was significantly less than total card brand liabilities. Will you have coverage for regulatory inquiries? As a highly regulated industry, you certainly have regulators breathing down your neck, some might say. You also know that the FTC has had its jurisdiction upheld, at least for now. And so when regulators come calling or send you a letter saying we want to know the following, will your policy cover, and are there sublimits on that? Again, are there exclusions for failure to maintain security, or will the insurance carrier try to rescind the policy based upon attaching the application, or are there non-rescindability clauses within the insurance policy? What sublimits are within, as I've started to mention for regulatory inquiries and payment card liabilities, are sublimits within the policy that would mean you thought you bought a $10 million policy, but you actually only have $250,000 of coverage for card brand liabilities, regulatory actions, or even just in terms of breach response, in terms of the press that you want to do and the PR you want to engage in. What are the sublimits there? And finally, something that goes back to what you heard much earlier in the program, retroactive date. If some claims are not discovered, if some incidents are not discovered for 3 full years, how far back does your policy let you look? And what I mean by that is some policies say we have a retroactive date, and they might even say the previous year. So they might say we won't cover anything happening prior to 2014. It's yet to be seen, but anticipate as insurance companies engage in the stunts that they do when they want to be strict constructionists on coverage. If you've had a long-term incident, query whether they would cover you if you've got a retroactive date that doesn't go far enough back. Now, I would say that it shouldn't affect you, but it's something you should think about asking for when you're buying your policy. My final slide, coverage tips for cyber-related claims. When you've got an incident and you want to get coverage for it, what should you do? Well, you should look at all of your policies. Start with cyber, best place to start, and think about your others as well, particularly if this is going to be a large incident. If we're talking a couple of 100 records or something that's not that big of a deal and you don't anticipate it exploding, well, perhaps you'd say, well, I don't know I need to go that far, but I would suggest you still anyway, because frequently what starts out as a small incident expands quite rapidly and can turn ugly very quickly. And if you're in the spot where you've given notice to multiple insurance companies, and multiple insurance companies either say no or thanks for letting us know when something goes wrong, you're much better off than the opposite situation where you decided not to give notice because you said, well, this is a small incident, it's 500 records, and it got much, much worse, and then your insurance carrier say, late notice, we are denying coverage on that basis. Give notice as broadly as you can. Figure out whether you need to work with panel vendors. There might be law firms, hotline companies, credit monitoring companies, and more, and forensics firms that are in the policy that you're required to use, or if you do use them, you'll get higher limits of coverage. Are there other contractual opportunities for recovery? So, for example, can you pursue somebody else that might be to blame for this? Work with your carriers. Understand that your carriers are working with coverage counsel and likely monitoring counsel. And what I mean by that is, even though there are claims handlers, and this is the ordinary course of business, the claims handlers are usually former attorneys that have decided to move as claims handlers. They then refer the work out to coverage counsel, and coverage counsel is almost never hired in an effort to provide more coverage rather than less. So be very cautious when you get letters back from your insurance carrier saying we're reserving our rights as to the type of coverage, and be thoughtful about how you can respond. And with that, I'll turn it back over so we can open the floor for questions.
All right. Scott, thank you very much. Very informative presentation. And for everyone, thank you so much, panelists, for some really good food for thought here. We're going to go right into questions and answers. As I said earlier, there's a question box. You're certainly welcome to you can even raise your hand on the panel, but if you can type your question in the box, that would be the most appropriate way to get your questions submitted, and I can get them in front of the panelists. So there is a question that I have, first of all, to start, specifically for the credit union industry. The question has been raised about essentially the cost of insurance and how to budget for insurance in terms of the, give us an idea for the size of the institution and what they should be looking at from a cost perspective for premiums.
Bob, I think it would probably be best for me to take this. This is Chaz Bellingrath.
Chaz.
We work with a lot of our credit unions on that exact thing, budgeting, the proper limits. First and foremost, it depends on the size. So, depends on your asset size and your revenue size. It also depends on the amount of records you have. So, past or current members, as well as employee data and any other data you may maintain. Getting a sense for that is very important. Secondly, really, is how good's your security? Have you had any claims in the past? Have you had any breaches in the past? That certainly takes into account. But one thing we do a lot with our customers is go beyond the application. So we dig in and speak to IT and figure out, where you are now and where you're heading. Because remember, these policies they do go into the future a little bit. They are annual policies most of the time. So it's important to not only, get a sense of where security is now, but where it's headed. So that's certainly important. As far as like minimum premiums are concerned, it's tough to give, an indication without knowing any information. I think our contact information is included in these decks. So if that credit union in particular wants to reach out, we can talk about your particulars and give you a solid indication. I would tell you that, as far as budgeting is concerned, just to end this, the market the rates have been relatively flat. I think really the rates have been increasing on large financial institutions, retail, and large healthcare. This would probably fit into like national account space, so things over $500 million to $1 billion and up in revenue, or insureds that have had large claim activity. But all in all, I would say our average premium really ranges from $7,500 to $25,000, depending on the limit, depending on the insured, and then obviously if you want to buy higher limits or get particular coverage. But I would say our average premium in our book of business is probably in the $10,000 to $25,000 range, and obviously it can get much lower too, depending on the size.
Okay, great, Chaz. Thanks. Kind of a follow-up question to that. How do I know whether to increase coverage? What would be the criteria for possibly increasing coverage?
Good question. I mean, having a good insurance broker and good coverage counsel is certainly important there. People like Scott Goddess can certainly recommend the coverage piece. I can certainly recommend the limit and the coverage in partnership with Scott. We do that for several of our clients. So working with people that know what they're doing, are dedicated to the space is important. If you buy your car insurance from the same person, you may want to rethink that. Making sure that you're working in partnership with someone who really, has, a strong background in cyber and tech, or at least uses a broker who does. That's certainly important. But yeah, I mean, limits really, you can tailor as much as you want. I mean, some of our smaller companies carry sublimits of, let's say, $250,000 for certain coverages, where, we have insureds that carry, $100 million of coverage and its full limits. So all coverage grants are up to the full $100 million. So really depends on what you're looking for. And again, based on the size, scope, and most certainly your security and breach history is very important as well. Again, my recommendation would be work with a broker that really knows what they're doing, reach out to coverage counsel, if that's needed as well, and then, check with IT and make sure your security's up to date and headed in the right direction. Really, all three of our industries, although all of us panelists are in the cyberspace, we all represent different industries. So I think it's important, first and foremost, to make sure your IT systems are up to date, you're headed in the right direction there, get insurance as a risk management and risk transfer, and then before you get the insurance, make sure you have the right coverage, consult counsel, consult your broker, and make sure that it's tailored to fit your needs and not just an off-the-shelf product.
Okay, Chaz, excellent. I just want to let everybody know we're at the top of the hour, but we did start 5 minutes late, so we're gonna go another 5 minutes. If there's any other questions, please submit them. I have one more question here, and this may be another. This is related again to coverage. We use a third party for credit card processing. Do we still need coverage?
Yes.
100%. Scott, you want to take that? Yeah.
Yes, this is Scott again. 100%. Because even if there's any possibility that there are card numbers that ever pass through your systems, no matter how quickly, no matter how much you think they're encrypted, no matter how much you think you're protected, unless someone is willing to guarantee you that you never have card information on your systems, A, you have a risk there. And B, if you're in the spot where the information never actually goes through your systems at all and is 100% through a third party, and yet somebody uses your credentials to hack into that processor or otherwise get access to that processor's trove of card numbers, you are at risk. And so it's certainly worth talking with your outside counsel and your risk management team and your business team to figure out, your IT team to figure out, when do we have the data? Do we have the data on our own? Because every single large name retailer you've seen out there that has gotten hit has A, been PCI compliant, B, used a third party processor, and C, was asked to pay millions and millions of dollars after an incident. And the insurance opportunities in terms of risk transfer are really quite varied. Some retailers out there, so for example, Target disclosed they have $90 million of insurance coverage and that they had $50 million in sublimits that were applicable to demands from the card brands. Others are in the spot where I've litigated multiple times whether there's a sublimit that applies, whether there's any coverage at all. And in other situations, I've counseled clients where, again, they relied upon a third-party processor. They were hit with a multi-million-dollar demand, but with just only a little bit of arm twisting and help in terms of guiding through the process, the carrier actually is cutting checks to the brand. So absolutely have insurance in place unless you can guarantee that you, A, don't have the information, B, you could never get, your information could never be used to compromise the processor overall.
Yeah, but just to echo comments that Scott made there, and this is Chaz Bellingrath, it's not just about PCI data. Remember that we all have employee data. We all have, in this case, for credit unions, the member data, account information. So, you know, a lot of people want to just touch on credit cards. Remember that you also have a lot of other information, you know, at risk as well.
Okay, excellent. Okay, one last question. The steps. This might be more on the preventative steps. Are there definite steps that I can take to make coverage more likely or less of a risk? In other words, yeah, I think the question relates to security measures.
So this is Scott and Chaz, and I know we all can answer this. In terms of making coverage more likely to get, it's worth at the front end taking a look at your policy and doing a very, very careful read through it and understanding where the trapdoors are. And then in terms of your application, bringing in a group of people that perhaps never sat at a table together before, including your risk manager, your head of IT and IT security, your legal counsel, and walking through the application and being very, very careful to fill it out. And Chaz, let me turn it over to you so that I can let others take advantage of your expertise in this space.
Yeah, I mean, I think it's a group effort. You know, I mean, a lot of people think that cyber coverage and privacy coverage is reinsurance for the IT guy's job. It's just it's not the case. It's a corporate-wide policy. It can affect a number of different departments, whether it's HR, finance, IT, risk manager, legal. I mean, you name it. A lot of times when we do applications over the phone with our insureds, and we have 5, 6, 7, 10 people on the line, depending on the size of the organization. So, you know, just flipping it to the IT guy and saying, hey, complete this is the wrong approach. It's important to make sure to include all departments because this isn't just the term cyber is misleading. It really is a cyber privacy and security and is a corporate exposure, not just an IT exposure.
All right, that's excellent. I know from the IT perspective, we see that all the time. We're constantly in the defense of the systems, and we see the IT managers going through a lot of, you know, they're asked a lot of questions about what they're doing to protect. So I want to thank everyone. There's several questions about the PowerPoint presentations being made available. We will make those available. We have we do have your contact information. If you would like to specifically ask for a presentation or any other questions, you can direct them to the email that you see at the bottom of the screen is nmiller@coopsys.com, and Nicole will process your questions, and we'll get that we'll get the slide deck over to you. And any other questions, please feel free to direct to Nicole. You can contact TrueShield at the number provided, and there's their website as well as our website. And I want to thank the panelists today, Paul, Chaz, Scott. Thank you very much. And we wish you everyone a wonderful day. Thanks for coming.